Hi, and before we get going with this podcast episode, a special edition, especially for the Financial Planning Week that is taking place in October 2022. First off, big disclaimer, I'm not a financial advisor, I'm not a financial planner. I am, however, a certified financial planner professional and a member of the Financial Planning Institute of Southern Africa. And everything I'm going to be sharing with you in this video is meant to be educational, informational, and factually based. So it's not advice. You must not use it as advice or see it as advice. If you need advice, if you feel once you've gone through the information and listened to what I want to share with you today, that you want help and that you need advice, then please contact your financial advisor or financial planner. Or if you don't have one, visit letsplan.co.za and find a financial planner who's close to you. You can have a look at a few and then go and see them and make a decision of who would be a best fit for you specifically. That's letsplan.co.za. Right, so let's get into this special episode. And what I'm going to be sharing with you today is really to sort of, I think many of us are, we know we need to look at our finances. We know we need to take control of our money. We know all this stuff. Nobody needs to tell us. Yet there is still something keeping us from taking that leap. So I'm going to talk about what does it mean to have a financial plan? What does a financial plan look like? What are some good habits and some bad habits for you to consider? Now, I could have gone any other way with this episode, but that's what I did. So what does it mean then to have a financial plan? Well, very simply, I think I've got to start off with by saying that it is not about how much money you make. Often we feel, if I can only get a job that's going to pay me more, if only I can get a salary increase, it's not about that. It's about how much you keep. It's what you do with the money that you get. I've seen in practice, I used to be in practice a few years ago, and I met with clients who really had the opportunity to do a lot with a little. So I've seen people that earn 100,000 Rand a month that it's not enough. And I've worked with people that have that earn 10,000 Rand a month, and they changed their own world, and what they managed to put together and create is just absolutely mind-blowing. So it's really not about how much you earn. Now, I do accept that there is a minimum level in South Africa specifically that we all need to earn just to survive. So I fully get that. But it starts off with mindset. It's not about how much you earn. It's about what you do with it and how much you keep. Just remember that principle. That's really what it means for me. And that is where a financial plan comes in. It means that you know in advance what is going to happen with the money. Now, obviously, you can have two types of plans, right? So you can have a plan for spending, or you can have a plan for creating wealth and changing your future. And those are the two avenues that you've got that you can decide, look, this is the way I'm going to go. And because how often does it happen? You know you're getting a bonus and you already go and buy something that you always wanted, or you book that holiday because you deserve it. You work so hard. You've gone through hell to get there, and all valid reasons. But sometimes we need to take a step back and say, what is my future self going to thank me for that I can do today? So it's the same thing having a plan, but you can either have a plan of not keeping any of the money, or you can have a plan for how much of that money will I, in fact, keep. It means also that if you have a financial plan, that you are intentional and mindful with the decisions you make about your money, because that means simply that you sat down, you thought through it, you made a plan, you are going to be intentional with your actions. So in other words, what you're going to do after you make the decision of what you're going to do, because without implementation, nothing is really going to stick. So it means being intentional. If I have a plan, I know what I'm doing. I know why I'm doing it. I know when I'm doing it. And there's clarity. So very, very simple then from that thing. Mindful just meaning that I applied my mind to it. I'm very aware of my reasons for making this particular decision. And it ultimately, I think, boils down to you controlling your money and not your money controlling you. So that's what it means to have a financial plan. Now, what does a financial plan look like? Because I think that's the big thing. Some people think it's like a thick book like this. Some people are just, I've got a one-page plan. Some thinks it's a spreadsheet. So what does a financial plan look like? I want to share with you today that the format of this is not important at all. Whether it's a spreadsheet, whether it's a little book, whether it's a one-pager, whether it's a big fat report that you get from a financial planner, it does not matter. What matters is that you address the different components of the financial plan. The format in which you do that is really not applicable or not that serious or that important at all. It's ultimately what works for you, because that financial plan must be a working document. You cannot have a document that sits somewhere that you don't even know where you put it, or you filed it somewhere on your computer and you don't know what you did with it, or you wrote it on a piece of scrap paper, which is perfectly fine, but then you don't know what you did with it. So you can't refer back to that. So what is quite important is that you must keep it simple. I think that's my sort of bottom line with a bit of intro about what does a financial plan look like. So focus on the components, but keep it simple. And you need to address all of the different components. I'm going to share it with you quickly on screen what these components are. But over time, you need to address all of these components. It's not a sit down and then do everything in one go, because you will get overwhelmed. You will get despondent. You will get like, oh, I can't do all these things. It's a matter of prioritizing. You've got to prioritize. If you look at all these things, what are most important? Do those first. And then as maybe your wealth increases, as you put money away, as you earn more over time, as you become more skilled and more experienced in what it is that you do, in that instance, you will address those over time. So don't try and address the whole shebang in one go. It is not going to work, but you need to address everything over time. Right. So let me quickly share with you the different components of a financial plan. It obviously starts off with your goals, and these goals are very personal. They mean something to you. They align to what is important to you, all of those good things. And you can sort of, in my mind, categorize them into three things. There's lifestyle goals. So the kind of life you want to lead, where you want to stay, the kind of house you want to have, the car you want to drive, that kind of stuff, you know. And then obviously another big one, because it's a big event and a big transition that is going to happen for you at that point. And that is absolutely retirement, right? So retirement today means different things to different people. It's a whole topic on its own. It depends on your view of this. But the fact of the matter is that we may all think, I for myself think, I'm never going to stop working. I do at some point want to reduce the amount of time that I spend working. But I love what I do, so I don't want to stop. And what I do means I can do it almost forever. It's not like a physical job. But I don't have control over my health. I could do all the right things and I can still contract some kind of a disease. And then I need some kind of provision in order to then carry me when I can't work anymore. So relying on the fact that you're going to work until you sort of drop dead is not a feasible plan. So we got to be also responsible sort of in a way for that. Right. Then the other big thing is educational goals. And it's not only educational goals for your children. It's also, if you have children, it's also educational goals for yourself, because there's a lot of jobs that's just disappearing. You have to reskill. You have to think about, how do I learn something else? How do I get better at what I am? What if there's advancement and new things that I need to learn in my line of work? That's going to cost money. So you got to think about those three things in the main. So I would say retirement is a big thing. Education is a big thing because it does cost a lot of money. And then all the other things can go under lifestyle goals. But anyway, you need a clear vision of this, and you need to know, what are my goals? Why are these my goals? What is driving that, right? And if you sit down with a good financial planner, a certified financial planner professional, or a financial advisor who really puts their clients at the core and the center of what it is that they do, they will spend a lot of time unpacking your goals and understanding your history, what drives it, why do you think the way you think, et cetera, et cetera. So that's sort of the first thing. Then the next one, where everything starts, because this is where we actually want to get. So this is why it's at the top, and we're almost looking up. There's a vision. That's where we want to go. We're looking forward, and now we need to get there. But what is going to get us there is money. So that's the big thing. So the first thing we need to look at is cash management. So in your financial plan, yes, your goals, you got to know what they are. And then you got to start with cash management, or budgeting, as we commonly refer to that. Now, I think a lot of people have a negative connotation with the word budgeting because they need to stare reality in the eye and then have an idea of, I actually need to stop doing that. I don't want to stop doing that. So let's just ignore it. But everything starts there because you need money. You need to employ money and invest money into your financial planning so that you can achieve these goals. So if these goals are real and if these goals are important enough to you, then you'll do what must be done. It's one of my core beliefs. It's not about what you do, it's what you're actually willing to do in the end of the day, within the boundaries of the law, obviously, but definitely something that is important. So it starts off with cash management. I need to understand, I need to go look at what do I have to pay and what am I paying through my decisions and my actions, because those are the things I can change. I can make different decisions here. But if I have to pay for water and electricity, and I have to pay for my house, and I have to pay for things that I bought and signed a contract for, I can't do much about that. I can go and negotiate certain things, but let me not get too deep into that. So, but ultimately, it's the things that you decide to spend money on as and when you like, where the opportunity is to loosen up some money that you can employ into this financial plan. Now, getting from the cash management or your budgeting or your cash flow to the goal, there's a lot of things that needs to happen in between here. There's a bridge that we need so that we can get from where we are to where we want to go. Now, the first thing, obviously, is that if I start my journey today, right, if I'm driving down to Cape Town, and it is very, very simple that I would go, all right, let's just say just outside Johannesburg, that I hit a pothole and suddenly, do I have a spare tire? Maybe I'm in an accident, do I have insurance, that kind of stuff, because something can inevitably go wrong. Not to say it will, chances are very high that it won't go wrong, but if something does go wrong, it has a significant impact on my planning. It has a significant impact on my timelines of when I want to get there and what I want to be able to do when I get there. So it's just very important to note that as well. Right, so the first thing that we do need to look at here is then managing risks. And there's a whole host of things here that you need to think about, but managing risks, so whether it is in your personal capacity to make sure that you can protect your earning potential and your ability to earn an income, and then also making provision for things that might have to be paid off if something happens to you, like you pass away, for example. But that's all about insurance, even your car, your house, your household contents, your health, all of those things are within risk. What if something goes wrong? What can I do? So that needs to be addressed. Then secondly would be investments. So the whole idea, you want the balance. You don't want too much insurance. You don't want too little insurance. You just want the right amount for what you need so that you don't spend unnecessary money on those things. We would rather take that money and channel that into investments so that your money can slowly but surely start working for you and you can create wealth from that. And wealth means different things to different people. And then I'm going to split out. It's actually part of investments. But the other thing is then your retirement strategy, because it's long term. The sooner you start, the better. And it doesn't matter the amount that you start with, really. I had a question the other day at a conference where I was at LeaderX, and somebody came up to me and they asked me, so how much should I be putting away? I'm studying, this is what I'm doing. And the answer is pretty much as you possibly can, right? Within the constructs of your situation, your plan, your goals. And it's what are you willing to do? So if you want to put away 50%, like 50, go for it if you can do that. If you're happy to forego a lot of things, some people are not. And then maybe 15% or 20% is the number. Maybe in a situation where you're looking after quite a few family members and you can only put away 5% of your income. The amount to start with does not matter. It's making a start that really, really matters. Right, so once you've got those in place, then there's two other components that's very important that needs to be considered. Doesn't matter which aspect of the components you are addressing, because this is your main part of the plan, right? These are the things you should be considering. But as you go through them, because none of these are linked specifically, but they're all integrated. So when you do one thing in one part of the plan, it does influence another part of the plan. So for example, if you take out insurance, it means you have less money to invest. You have less money to allocate to retirement. But you can't not do this, because if something goes wrong, none of this stuff is anyway going to be working out. So it's just very important. And also, investments may mean different things. It may mean financial instruments. It might mean something like unit trust, investment at the bank. It might mean owning a business, starting and owning a business. So investments come in various shapes and forms. But very important, tax planning, right? You've got to consider tax planning, very important. What is the impact? Sometimes the cost of getting to where you want to get is tax, but you should just pay what you should pay and not be blasé about your plans and then incurring unnecessary tax for yourself. So tax planning is very important as part of this, or at least considering the tax implications. And then lastly, estate planning should happen. We all think when you get old, then you need a will, then we need to do, only once I've started. But when you buy that first car, that first hi-fi, when you own anything and you're 16 years or older, you should get a will in place as a starting point. But you must always consider whatever decisions you make, buying property, investing into something, taking on debt, whatever it may be, what is the impact on my estate planning, and always be speaking to somebody that can help you with that as well. Right, so that's the components of a financial plan. Now, let me share with you quickly some good habits and some bad habits, right? So let's move on over to this side for the good habits. Now, the biggest thing you can do, and something that you need to talk to yourself about if you find it very hard to confront the idea of money, is that a very good habit is to take accountability for every decision. You make that decision. You have no control over the outcome of that decision. But if you were mindful and intentional and you know why you made the decision, then you know I made a decision to the best of my ability with the information that was at hand, as well as the situation I was in at the time. And if it doesn't work, I can change my decision. So that's the beauty. But don't get fixated and focused on the outcome. Be focused on the decision. Be happy with the fact that you made the decision and why you made the decision, and then enjoy the journey and learn. That's the biggest thing. Learn all the time, right? Now, that sort of leads to my next good habit, is that you have to take accountability. And in fact, you have a responsibility to educate yourself on money, to learn about money as much as possible, and to understand how money works. But once you know that, you and I also have a responsibility to educate others on money and how it works. Now, that doesn't mean giving advice. It's the mere fact of, there's certain principles that we need to adhere to, and you need to know those. And without those, you're not going to be able to really get the benefits from your plan that you would want to get. Then another big one, a very good thing, if you're in a relationship, whether you have a partner or you are married, you have a spouse, is to plan together, work together, be on the same page. I see a lot of people who they keep everything separate, and that's fine. We keep things separate in terms of bank accounts and incomes and things, but we plan together. We decide what we're going to do, how we're going to do it, when we're going to do it. And that's the important part, because you need somebody else. You must hold yourself accountable as a good habit, but you also need someone else to hold you accountable when maybe because it's easy to override ourselves. So really good to have two people on the same page working towards the same goals, and also knowing and understanding what is important to each one of you. So that is absolutely important. Then you have to automate your plan as much as possible. Now, what do I mean with automating your plan? You've heard the concept maybe about paying yourself first. It means that part of your budget, your cash management plan, is that you want to make sure that one of the expenses is your investments. So whatever investments you're making, or if you're paying for insurance, all those kind of things would then be going towards be part of that, right? So you have to allocate money to that. And then if you decide, look, I'm going to put away 2,500 Rand a month, 500 Rand a month, 100 Rand a month into an account for an emergency fund, or so that I'm able to do something in a year or 2 years from now, then don't think you're going to do that manually every month. Set up a stop order. Anybody can do that on the internet banking, or go into the branch if you don't know how to do that. Talk to someone that can help you with that. But you set up a stop order, and when your salary comes in or when your income comes in, it immediately takes that amount and puts it into the account. So it's out. Because the funny thing is, when you don't see the money in your account, it's like you forget that you have it. And one day you'll just wake up and there'll be a lot of money in the account where it went to, or the investment or whatever. But you don't spend it, because what we tend to do is look at how much money is in our account and then we spend it. So automate your plan. If you plan to pay more off on your debits, on your debt, then ask them to increase the debit order. If you plan to save, then let it go there automatically. If you want to invest or something, or let it be by debit order as much as possible. But automate whatever it is that you want to do as much as possible, so that you don't have to think about it. It's not taking time and energy. It just happens. And then you've got to track and review the plan regularly. You can do it on a weekly basis, monthly basis, quarterly basis, but you've got to look at it, I would say, at least monthly, to sort of see, what did I plan, what did I do, and where am I? So that you can sort of track whether you're on there, because that information is extremely, extremely powerful. Then lastly, some bad habits, right? So I think a bad habit is definitely avoiding the topic of money altogether, because it is a very personal thing, and we often feel ashamed with the fact that, I am where I am, I caused the situation. And that's already step one in taking accountability, just realizing this is because of me, this is nobody else's fault. And to blame anyone else for your circumstances, or to say it's life or whatever happened. I mean, there might have been nothing happened in your life, or something excruciating happened in your life, and it put you into a situation. At the end of the day, you still made certain decisions to help or not to help, or to do things. It was all within your power and your control. We don't believe it is, but it probably is 99.9% of the time. So don't avoid the topic of money. Learn about it. Educate yourself. By not talking about it, by ignoring it, it's not going away. It's becoming worse, right? So that's the first one. Then not learning about how money works, as I mentioned just now, maybe it leads into that point. Educate yourself, make sure you know, and then take that and help others. Start with your own family and help them understand. But it's very, very important that we try to get that out. The other day, somebody asked, whose responsibility is it to teach people about money, or to make sure that we increase financial literacy, as it's commonly referred to? It's all our responsibility, in my opinion. It's not just one person's responsibility, or a company's responsibility, or the FBI, the Financial Planning Institute's responsibility, or the Financial Services Conduct Authority, or the banks, or the insurance companies, or the investment houses. Yes, they are all responsible, but so is you and I. So we definitely need to play our part and share with what we learn. And specifically, the younger we can start, the better. Then buying consumer goods through financing. And if I say in consumer goods, right, I mean, a laptop for me is a consumer good, but I use it for business. I use it to make money. So it's an investment. It's a little bit of a different thing. And if I'm suddenly in a need and I don't have the cash to purchase, then I can make a calculated decision around whether I want to do it on debt or financing it or not. But overall, buying kettles and beds and fridges and TVs and all those kinds of things on terms, right? So paying it off, you pay double or more. Once I was standing in game, I was looking at the cash price of a fridge, and then I looked at what the monthly repayment is, and that's what everybody looks at, is looking at can I afford the monthly repayment? And then you go that amount times 36, and then you realize I'm going to pay three times what this fridge is listed here for if I paid cash. So by rather waiting and putting money away so that you are able, and sometimes we feel, but I need it now. Do you really? Isn't there another plan that you can make? I do get it, but I'm saying try and avoid buying normal consumer goods, things that you're going to use and have to replace at some point. Buying that on financing or on terms is not a good idea most of the time. And then the biggest thing that I think is a bad habit is having this belief, and it is a habit, right? It's a belief, but it is a habit that a story that we tell ourselves that money, if I get more money, it will solve my problems. If only I could earn more money, I'll do things differently. If only I could earn more money, I'll pay off my debt. If only I earn more money, I'll invest more. And some people go and job hop, right? Because they can get more here than the next place, and nothing changes. If you look back like 3 jobs ago, you'll probably find that you're earning double what you were earning back then, if not more. Yet maybe we're still in the same position that we were at that point in time, because it's a function of our decisions and our actions. So don't believe that more money will solve your problem. And never also make moves in lieu of earning more money unless it's significantly more and you are already in control of what you do with your money. So that's it. Thank you very much for joining me for this special episode for the Financial Planning Week. And go visit letsplan.co.za if you're looking for a financial planner or financial advisor in your area. And you can also visit the Financial Planning Institute's website for more information about what they do and also everything that their members need to comply with. But with that, my name is Francois du Toit. Have a fantastic week and all the best with your financial planning.